Hello and welcome to Insurance Business TV for our third Construction Insurance Power Panel of the year for Australia. We're going to focus on the challenge of worker-to-worker insurance claims. Our experts are Peter Jeeves, Head of Construction for Lockton, he's based in Brisbane, and Austin Rosier, he's Senior Risk Advisor for OmniSure and he's in Sydney. Welcome back to both of you again. Nice to have you on.
Thanks, Danny.
Thanks, Danny.
Yeah, so I've been looking at some industry reports, and worker-to-worker claims account for between 30 and 50% of the total value of liability claims in construction portfolios. We talk quite a lot about the state of the market, and is it fair to conclude that this has prevented some segments of construction from softening as much as others? And in your portfolios, which are both quite different, where are you seeing worker-to-worker claims coming up the most? Peter, could we start with you on that one?
Thanks, Danny, and thanks for having me back. The figures reflected in these reports are consistent with what we're seeing from a worker-to-worker perspective, and from and insurers remain cautious of worker-to-worker claims in their portfolio. As a result, we are seeing the softening of that liability market, liability insurances across the board, not as pronounced as other classes of insurance. But notwithstanding, we are still able to negotiate some savings in that area, mainly by differentiating our clients in terms of their exposure to worker losses. So not all construction participants have the same level of exposure to worker claims. And more importantly, some clients are able to demonstrate their ability to manage that risk more effectively and therefore achieve better pricing outcomes.
And what about you, Austin?
Yeah, I think it's obviously quite interesting always hearing Peter's take on it, dealing with quite large, often tier 1, tier 2 type contractors and large sort of government and infrastructure projects, whereas we're obviously dealing still with some larger single construction projects, but it tends to be commercial, residential in nature. We don't see as much of that large civil basis. I would certainly say on the civil side, our labour hire clients understandably having large issues in that area. And I've seen a number of claims go, close on 7 figures with labour hire specifically. But I would say that generally material damage premiums have relaxed more than liability premiums. And I think what we're sort of finding is that for our annual insurance policies, so those clients who do hold a all-encompassing insurance program, the rates on the liability aren't shifting significantly, maybe a 5 to 10% discount at best for a really strong performer. Where we do tend to see some of the savings is from incumbents and from newer insurers, not from the incumbents. And really for them, they're pricing more aggressively, I tend to think, to get some market share. We're also seeing more stringent conditions, like really pushing high excesses for these types of claims, just to try and balance this tension between maintaining affordability and there being almost an inevitability that these types of claims do occur.
Austin, let's stick with you. I mean, you touched on it a little there in your answer, but what do you see as some of the factors that are driving the worker-to-worker claims that you're seeing?
Yeah, I think something that insurance loves to do is predict loss and predict issues and be able to base it upon what they're experiencing. And with worker-to-worker claims, we're often seeing quite long tails, whereby there might be a workers' compensation claim afoot for a number of years before it's brought forth under a construction policy. And I mean, I'm aware of multiple claims at the moment that are being heard and being worked through that are 8-10 years post the initial injury that was suffered, which that obviously makes it really difficult for insurers to predict, particularly for underwriting agencies who might have someone was their capacity once upon a time, is no longer their capacity and is now being hit with that type of claim. It can be really difficult to price that, obviously, which makes things challenging. And then unintended vicarious liability is another one we're seeing a lot of, whereby there might be something that is high risk that isn't fully captured within a question set, particularly on some of these annual policies where everything's kind of covered by default unless explicitly stated otherwise. And again, it's an area where insurers might be taking on unintended amounts of contractor work or even contractor work of a specific nature that they may not otherwise have wanted to. No, and then obviously workers' compensation is always going to be an issue here, right? As long as workers' compensation is inefficient, we are unfortunately going to see worker-to-worker claims issues.
Peter, what about you? What are you seeing as the main drivers?
Similar issues to what Austin just highlighted. I mean, obviously, the two key areas where we see worker-to-worker claims are, subrogation of work cover against other parties, which end up being under the liability policy, and common law action. And as they relate to both those, we see work cover authorities in different states being aggressive and trying to recover those losses, and that's driving a lot of these work cover claims. And we are seeing the courts being a little bit more willing to hear common law actions and to provide significant amounts of payouts for injured workers in some case dubious circumstances. So that relaxation of the courts is certainly driving the claims in this space, which is obviously a bit of a concern if those trends continue.
And Peter, those subrogation and common law drivers you talk about, I mean, have the trends for those changed much in recent years, or have they always been drivers as long as you've been doing your job?
Look, they've always been around in the drivers, and obviously changes in the law. So things like proportionate liability legislation certainly slowed down some of that. But we are starting to see it kick off again. We're getting feedback from insurers that are saying that claims that they used to settle for $300,000 to $400,000 are now being settled for $500,000 to $700,000. So it's not just simply the number of claims that are coming through in this space. It's the quantum that these claims are being settled for, which is significantly higher than what we've seen in the past.
And probably just to say to one comment on the cost increases, I mean, obviously a lot of these are relating to potentially someone's livelihood and not being able to work. As cost of living goes up, it's probably only natural that we see a corresponding increase in the settlement of these claims that might be related to permanent disablement or inability to work as well.
So is that one of the trends that's changed, you think? The cost of living has boosted the cost of these claims, Austin, or are there other things impacting as well?
Yeah, I mean, look, there will be other trends too, but I mean, it's certainly something to be mindful of that. I mean, I think unfortunately wage growth hasn't always matched with inflation, but certainly it's something that's people are very mindful of at the moment as consumers. And I can imagine that being a pressing concern for any lawyer trying to make sure that they get their client the right amount to live out the rest of their days if they can't work at a full level.
And Austin, sticking with you as a broker, what are some of the strategies you use to try and bring the cost of these claims down?
Yeah, I mean, look, it can be really challenging. I think a lot of it comes down to proactive planning. Two things that we've kind of had to work through with our clients recently were business structures causing unintentional consequences. So we've seen a lot of people shift to almost internal labor hire models in the construction sector and across a lot of sectors that have large wage exposures. That's something that we've seen have unintended consequences, whereby you might have a situation where two common entities are almost having to recover off each other. And there's certain policy wordings which can have exclusions around that, or they can be very high excesses, and there can be something that we have to actually negotiate with insurers and communicate to insurers at the time of placement. So it's actually understanding with the client what their corporate structures look like, how they intend to operate them, and make sure that if they are intending to restructure, perhaps for tax purposes, that there aren't impacts upon the insurance program that are unintended as well. And then again, like doing things like reviewing contracts and make sure that we have an understanding of what that exposure looks like. And I mean, as Peter would well know, a lot of the contracts from the tier ones are quite onerous in their conditions, and those conditions tend to just get passed down the line, passed down the line, passed down the line. So we might have a client who's a subcontractor, and they might have really significant conditions on that contract, and they as a business might be much smaller and not necessarily able to have the bargaining power in the market, or even the funds to afford the type of coverage that might be required of them. So that's something they just have to be aware of and work with them. And then it's really just working to mitigate the risk. And once they know what their exposures are, actually working with them to best address them.
Yeah. So yeah, Peter, so are you seeing that sort of situation where it's subcontractors, and is that something you have to watch out for as a broker?
Oh, certainly. Most of our clients are at the head contractor level or principal level, and we do see head contractors being squeezed. They're the principal contractor on site, and they're their party responsible for safety at site. So they tend to be the ones that cop it the most in terms of these worker claims. But from our perspective, how we try and manage this for our clients is to identify what their exposure is, and that's looking at, okay, how much labour hire do they employ, how much do they self-perform versus subcontract out to other parties. The parties that they engage, are they regular subcontractors? Are they new? All of those sort of things help identify the exposure for a client and help sell those risks to insurers. And then it's how they manage that risk effectively. What are their on-site safety management protocols? How do they get subcontractors onto site and induct them on site? And then how do they identify these exposures or risks at site and get these employees back to work as soon as possible? The thing that's difficult, obviously, is that these workers aren't the head contractor's employees. So to manage that's difficult, but it's not impossible. And those that manage it best end up having a better claims history. And we can demonstrate that with insurers and get better results for our clients that way.
As a question, Peter, out of curiosity, I mean, for us, a lot of our clients, even quite small clients, would have a minimum 50K, 100K sometimes worker-to-worker excess. Are you seeing a proportionately larger increase in that minimum excess that might carve out claims for some of your clients, or it's still sitting around that sort of 50 to 100K price point?
A lot of the clients tend to, and projects tend to have $250,000 as the minimum deductible. We can negotiate it down to $100,000 if they've got a particularly good claims history, but $250,000 tends to be the minimum for most of the larger contractors and projects.
I like this cross questioning. This is nice. It's a nice addition to the power panel. Peter, sticking with you, you talk about getting people back to work quickly, and mental health is a surprisingly big driver of a lot of the problems getting people back to work. It's just another tricky area that brokers, I suppose, have to be across in some way. I mean, is it on the wavelength of brokers in your space? And if so, I mean, how do you start to help a construction firm that has some sort of mental health issue with a worker?
It's a really good question. Psychological workers' compensation claims are on the rise. We do have in our company the benefit of having a people risk division that specialises in workers' comp and return to work. And therefore, we ask, that part of our organisation is seeing a significant rise in that area, and we are starting to see it in terms of the worker-to-worker claims. But I expect and anticipate, because of the delays that Austin mentioned, that we're not going to see the full effect of those for another 3 or so years. So we do need to starting to be aware of them, but they are notoriously difficult claims to manage and mitigate. Unlike a broken leg or a sore back, it's something more difficult to diagnose and to try and get people back to work. But there are organisations that can assist, particularly for your own employees, but those of your subcontractors as well. And it's certainly an area that I think the industry as a whole is starting to focus on.
And Austin, how about you? How do you see this mental health challenge from a broker perspective?
Yeah, I mean, look, I think Peter's hit the nail on the head. It's really difficult to manage these claims in particular, and obviously there's a lot of statistics that support that, and the growing cost of these claims from a workers' compensation standpoint. I thought it was quite interesting during COVID. There are a number of mental health related claims that came out of purely contracting COVID while potentially at work. And I think off the top of my head, the average claim was 20 to 25 grand. Construction was obviously one of those industries that did maintain largely operational throughout that period of time. So it will be interesting if there's more granular data that comes out over time as to what that looks like. But what I would add, I guess, where my two primary concerns are, and one of the more unique claims I've seen in this sector was a situation whereby we had a labour hire employee alleged to have bullied an employee of the host organization. And the host organization, obviously, there was a workers' compensation claim there. And then once the claim was investigated, it was then brought back against our client as a liability claim. And it was a really interesting and unfortunately quite complicated claim scenario, as you can probably imagine, where you would typically see this sort of claim fall under an EPL employment practices, D&O type claim, but this time it was being brought against the labour hire business's liability insurance. So it was just quite unique to see that play out in real time. And the other thing I think that we have to be mindful of as well is obviously workplace safety is tantamount. Unfortunately, I know this will be released in a couple of weeks, but I was reading the news this morning and it sounds like there's been a death at a factory in Sydney overnight. And I think about situations like that where obviously, how do the other employees respond? There are going to be employees who've witnessed that, who've seen that. That's going to be an immense amount of stress and distress, and rightfully so on them. And given the, I guess, striated nature of the construction industry, where you might have a head contractor and then a number of different subcontractors, it's something that I'm mindful of, where you might have a workplace mental health claim relating to a serious worksite injury, where you've perhaps seen an employee of another business or a labour hire business or the like on site. And I just think about what a claim might look like there and how complex that may be, because you're going to have a lot of moving parts. Initially, obviously, being a safe work investigation, some sort of workers' compensation claim, but then obviously the mental injury and trauma to those who experienced it, and then who actually ends up being held responsible for that. Is it the principal? Is it if it was another subcontractor, is it that business? It's just something that I'm quite concerned about, and obviously very cognizant of in the increasingly litigious sort of workers' compensation space.
So is it fair to say that once mental health is part of things, the claim becomes inevitably more complex, or is that simplifying things?
Oh, no, I think that's a fair statement to make. And I mean, much like Peter, we have a team that manages workers' compensation, and they are very, very good at it. It's a very specialized area of insurance. But yeah, I think it's something where, again, all of our construction clients, any client with a large manual labor force, we're saying, hey, look, you've got the option to manage this in-house if you're in most states of Australia. Just because you have the option doesn't necessarily mean that that is the most advisable thing to do. You're generally much better engaging someone and paying them a fee to manage it on your behalf. You usually get better outcomes with respect to your premiums, with respect to your return to work processes, and obviously, even more importantly, with your day-to-day risk management.
Austin, thanks very much. And thank you, Peter, for shedding some light on worker-to-worker claims issues. And that wraps up our Construction Insurance Power Panel, looking at market trends and this impact of worker-to-worker claims. Thanks for watching Insurance Business TV. Bye for now.